Welcome. We are following this book, Accounting Principles. Just today, we are going to start completing the accounting cycle. This is our learning objectives. Prepare a worksheet. Number second, prepare closing entries and post-closing trial balance. Number third, prepare the steps in the accounting cycle and how to prepare correcting entries. Number four, identify the sections of a classified balance sheet. This is the four objectives of this chapter. Chapter name again, I repeat, completing the accounting cycle. Okay, so prepare a worksheet. Just today we will discuss this section, prepare worksheet. In our worksheet, just we have three subsection. Steps in preparing a worksheet. Steps, Excel we have 5 steps in preparing worksheet. And number second, preparing financial statements from a worksheet. From a worksheet, just we will prepare financial statements. Actually, financial statement includes income statements, owner's equity statements, and balance sheet. So basically, we prepare income statements and balance sheet, and owner's equity statements will be included in the balance sheet. Okay. So preparing adjusting entries from a worksheet. These three subsections. Okay. So prepare worksheet. First one we discuss what is worksheet. In our worksheet, just we have 5 characters. Characters comes from definitions basically. So multiple column form used in preparing financial statements. Multiple column form used in preparing financial statements. Number second, not a permanent accounting records. That means worksheet is not a permanent record. Number third, maybe a computerized worksheet using an electronic spreadsheet program such as Excel. That means we can use Excel to prepare this worksheet, and prepared using a 5-step process. This is the 5-step process in our previous slides. I have shown this, the 5 steps. This is the 5-step process. Last one, use a worksheet is optional. Worksheet is not a mandatory matter. This is the optional methods to record the accounting transactions. Next slide, steps in preparing worksheet. This is the 5 steps. Please look here. Step number 1, this is the accounting titles. That means cash, account receivable, equipment. This will be the accounting titles. And trial balance, this is the first step, step number 1. And adjustments, this is the step number 2. Trial balance, that means adjusted trial balance. Adjusted trial balance is step number 3. That means after considering trial balance and adjustments, we are getting adjusted trial balance. Step number 3. And income statement, this is step number 4. And balance sheet, this is step number 5. Okay. So here, this is the prepare a trial balance on worksheet. That means on worksheet we will prepare a trial balance and enter adjustment data. And number 3rd, enter adjusted balances. And number 4th and 5th, that means extend adjusted balances to appropriate statement column. That means this is the adjusted trial balance, trial balance data. Just we shifted to income statements and balance sheet. Okay. This is the Pioneer Advertising trial balance, October 31st, 2017. This is the cash, 15,200. This is the cash supplies, prepaid insurance, equipment, notes payable, accounts payable, unearned service revenues, owner's capital, owner's drawings, service revenue, salaries and wages expense, and rent expense. Total 28,700. This is the debit side, and credit side is the same. And just this is prepare a trial balance on worksheet. That means this trial balance, this is the trial balance. That means this trial balance comes from here. That means this the same matter, same trial balance. The includes all accounts with balances. This is the 28,700. 28,700. This is the same matter. Please look here. This is the same figure. Trial balance amounts come directly from ledger accounts. Okay. And number second, adjustments. The adjustments, we have the adjustments for Pioneer advertising are the same as the adjustments in illustration 323 page 109. They are in the adjustment columns of the worksheet as follows. This is the adjustments 1, 2, 3, 4, 5, 6, 7 adjustments. Pioneer debits and additional accounts. Supplies expense 1500 for the cost of supplies used, and credit supplies 1500. So here this will be supplies expense debit and credit will be supplies, credit supplies. So we can see here supplies expense debit and supplies credit. Okay, number second, Pioneer debits and additional accounts. Insurance expense 50 for the insurance that has expired, and credits prepaid insurance. So here insurance expense will be debit and prepaid insurance will be credit. So this is the insurance expense debit and prepaid insurance credit here. This is two. Number three, the company needs two additional depreciation accounts. In debits, depreciation expenses 40 for the month's depreciation, and credits accumulated depreciation equipment 40. So here depreciation expense will be debit and accumulated depreciation will be credit. So depreciation expense debit and accumulated depreciation credit 40 taka. Okay. And for Pioneer debits unearned service revenue for service performed and credits service revenue 400. So here this is unearned service revenue debit and service revenue credit 400. And Pioneer debits and additional accounts receivable 2000 for service performed but not billed, credit service revenue. So here accounts receivable 200, this is debit, and sales revenue 200 credit. Number F, the company needs two additional accounts relating to interest. It debits interest expense for accrued interest and credits interest payable 50. So interest expense debit and interest payable credit. This is the interest expense debit, interest payable credit 50. And then last one, G, Pioneer debits salaries and wages expense 1200 for accrued salaries, and credits and additional accounts salaries and wages payable 1200. So salaries and wages expense debit and salaries and wages payable credit. This is the salaries and wages expense and salaries and wages payable 1200. Now please on next slides, just recall this is the journal showing adjusting entries and adjusting journal entries. From chapter 3 we have learned this. Now step 2, enter the adjustments in the adjustment columns. Now please look here. Here we have 7 adjusting entries. Number 1, supplies expense and supplies. So supplies expense, we have no supplies expense title here. So here this is the supplies expense, this is debit. Just we have inserted this column, and this is the supplies. We have a column here, supplies. So we will write down here the supplies 1500. Please look here again. This is the supplies expense. For supplies expense we have no column here. For supplies expense we have no column 1500. So and for supplies we have a column. That means this is the supplies as a column 1500. This is the credit. So this is the supplies. Please look here. This is the supplies. Supplies credit 1500. But for supplies expense we have no column. So we insert this column 1500. Okay. Next, insurance expense and prepaid insurance. So for insurance expense, for Prepaid insurance, we have a column. This is the credit 50. That means this is the prepaid insurance 50. But for insurance expense, we have no accounts title. So this is the insurance expense. We inserted this um, accounts titles. That means this is the 50. And number third, depreciation expense and accumulated depreciation. So this 40 depreciation expenses 40 and accumulated depreciation. These two column we have inserted here because of we have no accounts title here, and so we have inserted these accounts titles, two titles. That means depreciation, accumulated depreciation and depreciation expenses. Please look again. Accumulated depreciation and depreciation expenses. This 40 credit and this 40 debit. We have no accounts title in our trial balance, so we have inserted these two columns. And unearned service revenue and service revenue. The unearned service revenue and service revenue, please look here. Unearned service revenue, we have a column here, so this is the debit, and this one service revenue. These two columns are available here. Please look here. This is the unearned revenue. Unearned revenue 4,400. This is the debit, and service revenue. This is the 400. This is the credit. So these two column, in our accounts titles we have seen here. That means these two columns here, unearned service revenue and service revenue. Now accounts receivable. We'll look here, account receivable and service revenue. So accounts receivable, our account receivable, accounts receivable and service revenue. So service revenue 200 and account receivable. We have no account receivable column here. That means not column, titles. Account receivable, no titles here. So here we have no titles of account receivable. So we have inserted this account receivable here. This is the account receivable 200. This is the debit, and service revenue. That means service revenue. This 200. This is the credit. Now interest expense, interest payable 50-50. $50, $50. So interest expense, and this is the interest expense, interest payable. Just in our accounts titles we have no titles. That means in our trial balance we have no accounts titles of interest expense and interest payable. Just we have inserted the accounts expense as interest expense and interest payable. This interest expense 50, and this is the interest payable, this is the 50. Okay, and last one, salaries and wages expense and salaries and wages payable 1200. Please look here. This is the salaries and wages expense. We have these titles, so we do not need to insert any titles here, salaries expense, but we need to insert salaries and wages payable. This is the 1200. Okay, so adjustments after addition we are getting 3440. Both column will be same. That means we have this figure now. This is the additional accounts as needed, but if we have needed any titles, so we call it, this is the additional accounts. This is the additional accounts. So we have inserted these additional accounts. Okay, and this bracket just shown here, enter adjustment amount, total adjustments columns, and check for equality. That means this is the equal figure both sides. And adjustment key, we have 7 keys here: supplies used, insurance, depreciation, service revenue, recognized service revenue, accrued, interest accrued, and salaries accrued. These 7 points. Okay, so now adjusted trial balance. This is our third column. Trial balance, adjustments, and adjusted trial balance. Okay, now please first on cash. So this is the cash. We have no adjustments with cash. So this cash will be here. This is the trial balance debit side. This is the trial balance debit side. Here also this is the debit side. Okay, now supplies debit, and this is the supplies credit. So supplies, this is the debit, this is the credit. In our debit side we have 2500, and in our credit side we have 1500. Okay, so here after balancing, that means this is the 2500 and this is 2500. Okay, and now after balancing we are getting 1000. The debit is greater than credit, so it must be debit balance 1000. So we have shown here, this is the debit side. So I think everybody is clear here. And now prepaid insurance, this is the debit 6000, this is the credit 50. So accordingly it will be 550. So debit is greater than credit, so debit will be 550. And equipment 5000, no adjustment here, so this is the 5000. And notes payable, this is credit and no adjustments here, so it will be credit, same figure. Accounts payable 2500, this is the 2500. And unearned revenue, this is the 1200, this is the credit and this is the debit. So credit is higher than the credit, and after balancing it will be 800 credit. And owner's capital, no adjustment here, so this is owner's capital 10,000. Owner's drawing 500, no adjustment here, 500. And service revenue 10,000, so this is the credit, service revenue 10,000. So this is the credit, and this two on is credit also. So 10,000 are here, 600, so it will be 10,600. Okay, I think everybody is clear. Now salaries and wages expense 4000, and this is debit, and this is the debit 1200. So total debit will be 5200. This is the rent expense 900, this will be the 900 because of no adjustments here. Okay, and now this figure, the same figure, this one, that means this one, and this three figure, this is the three figure. So both sides trial balance 30,000, 1090, 30,000 on 190. So 30,000 190, 30,000 190. The total, the adjusted trial balance columns and check for equality. So we already set the same figure. Now income statements. So you know that this adjusted trial balance, just the accounts title will be shifted in our income statement and balance sheet. Okay, so this is the adjusted trial balance. That means this trial balance, this adjusted trial balance 30,000 190. This is the 30,000 190. That means same trial balance here. Pioneer advertising adjusted trial balance October 31st 2017. Okay, so here cash, account receivable, and this rate figures, okay, related to adjustments here. That means account receivable, supplies, prepaid insurance, this accumulated depreciation, interest payable, unearned service revenue, salary and wages payable, and this rate figure just related to our adjustments. Okay, now this is the income statement and balance sheet. That means the financial statements column, extended amounts to the financial statement column. Just this amount, this is the cash. Cash is the balance sheet item. This is the balance sheet item, and this is the supplies. Supplies 1000. This is also the balance sheet items. Then here, this is the prepaid insurance. This prepaid insurance 550. And equipment, this is also the balance sheet item. And here the balance sheet, that means this is the asset, and this notes payable, accounts payable, unearned revenues, and owner's capital. These four items, this is the four items: notes payable, accounts payable, unearned revenue, and owner's capital. These four items, this is the liabilities and owner's capital related items, so this must be credited. That means this is the balance sheet, asset equal to liability plus owner's equity. So this is the liability item, this 3 on, and owner's equity item this one, and owner's equity another items related. This is we call the drawing item. This figure, this is the drawing item also related to owner's equity. Okay, now service revenue this one, service revenue, that means uh, service revenue 10,600. This is the income statement item. Income statement actually income and expenses. So income just will be shown in our credit side, and expenses in our debit side. Okay, so salary and wages expenses, this is 5,000, 5,200, and rent expenses 900, and this is the supplies expenses, the insurance expenses, and accumulated depreciation. This is the balance sheet items, that means 40, and depreciation expenses 40. This is the income statement debit items. Account receivable, account receivable, account receivable, this is the balance sheet asset. That means this is the current asset. And interest expenses, you know, interest expenses, this is the income statement expenses items. Okay, so total, in total here, this figure, this is the addition, and this figure, this is the credit. That means this is our income, this is our expenses. This is expenses and this is income. In our balance sheet, this is our total asset sides, and this is our total liability as owner's equity side. Extend adjusting trial balance columns to appropriate financial statements column. That means this is the two column. Okay, okay, that means this is the adjusted trial balance, adjusted trial balance. That means this is the adjusted trial balance. This items shifted here, that means income statement, and here this is the balance sheet. Now this is our compute total columns, compute net income or net loss. So compute net income or net loss. This is our total income, this is our total income here. Please look here, total income, total revenue 10,600, and after balancing this figure, just we are getting this figure. This is our net income. So net income will be shifted in our balance sheet, just in our credit side. That means we know income, net income always we add with the capital. That means this is the owner's capital 10,000, addition figure with the owner's capital. This is the owner's capital. So we must show this figure in our balance sheet side. Okay, so in balance sheet, two sides equal. Now look here, this is the equal. So this is the compilation of worksheet, and finally this is the trial balance column, adjustments, adjusted trial balance. This is the income statements and the balance sheet. Okay, I think everybody is clear here. Now question, net income is shown on the worksheet in the net income. Just this is very important question. The net income is shown on the worksheet in the income statement debit column? No. Balance sheet debit column only? No. Income statement credit column? No, of course not credit column. Or balance sheet debit column? Income statement, net income, income statement credit column, and balance sheet debit column? No. Income statement debit column and balance sheet credit column. This is yes. I think this will be the correct answer. This is the correct answer. Okay. So it's all today. Now our next lecture on preparing closing, our next lecture on just this figure, prepare financial statements from a worksheet. Just it will be our on these topics. It will be our next lecture, preparing financial statements from a worksheet. Okay, thank you so much.